Ladies and gentlemen, good day and welcome to the Max India Limited Q1 FY'25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ajit Mehta, Managing Director and CEO. Thank you, and over to you, sir.
Thank you. Namaste and good evening to all of you. First of all, greetings on the eve of the 77th Independence Day of our country. May India prosper even more. A hearty welcome to you on behalf of Max India Limited to our Q1 FY'25 earnings call. For the benefit of audiences who may be joining us for the first time, I have with me my colleague Ajay Agarwal, who's the Deputy CEO and the CFO for Antara and spearheads both growth and investor relations for the company. Ishan Khanna, who's the CEO for Antara Assisted Care, Sandeep Pathak, who's our CFO for Max India, Ankit Kalra, CFO for Antara Assisted Care, Nishant from the Investor Relations team, and SGA, our Investor Relation Advisors. We have uploaded the results and the investor deck on the exchanges, and I hope everybody had an opportunity to go through the same. To start with, it gives me great delight to share we have had a very impactful and interesting quarter. And before I get into details, I must share that we have made significant progress across all business verticals in Q1 FY'25. On the asset side, on Noida, the phase 1 construction is on track. Collections are ahead of plan. On Gurugram, we are expecting the RERA approval any day now, but we have had some, we are seeing some good response from prospective customers. Let's see how that goes once the project gets announced. Discussions from other geographies are also in progress, and I will detail them shortly. On the Antara Assisted Care Services side, we have added 136 new beds. This is the capacity we have been waiting for a long time. So now, in addition to the 68 operational, we have 136, about 200 beds now under operation, and some more, which I will talk about as I go along. On care homes and care at home, both very healthy revenues, more than very high double-digit growth over last quarter and year on year. On the product side, while the revenue has grown multifold, obviously the business is small, so the percentages are very high in terms of growth. We have also added one more condition, which is respiratory rehab. This is focused on seniors who have been diagnosed with some kind of respiratory disorder, like asthma, allergies, which causes respiratory distress. So we've launched, a few products for this condition. With that, now we have 3 conditions, which is joint pain management, fall, and now respiratory, rehab. We've also taken a decision, if you recall, we had a offline Medcare products channel. Now, after the launch of AGZ, we have merged those 2 channels. So it gives us much better synergies on the back end in terms of warehouse, logistics, operations. So there will be an online team and an offline team of both the businesses now, stand merged for better synergies. So you can see on all the promises we made, we're executing to that. Now let me, go vertical by vertical. On the residences vertical, as you know, on Dehradun, all inventories were sold out. We're now having a situation where some people are reselling, and that's giving us a small revenue stream because we do get a commission, on resale. 192 of the 197 apartments have been handed over for possession. We have sold all, as you know, but 192 have been handed over now for possession, and 180 residents enjoying the facilities in a very calm and serene environment. The operational revenue from Dehradun has increased to about 5.5 crores for Q1 FY'25, a growth of 17% over corresponding last quarter. And because the sales have been quite robust, the community continues to be PBT and cash positive, with the overall cash surplus about 120 crores as of June 24. In Noida Phase 1, all inventories were already sold out in March 23. I'm pleased to inform you that our collections are better than planned. We have a 99% collection efficiency, which is a vindication and testimony of the quality of customers we have acquired. We have achieved till date from ITD a collection of 351 crores, with a 24% growth over last year. On construction, we are on track. We've already completed block work for all 3 towers, and now finishing and interiors, works are underway. We are confident we'll be able to complete construction and ready for, delivery timelines as promised. On phase 2, which was the phase 2 of Noida Sector 150, has been a temporary setback because RERA has rejected our application. We have taken some legal advice and already filed an appeal with the appellate authorities. We're confident we should be able to get a favorable response. It may be related to some ambiguity around Sector 150, but we don't know. But let's wait for the appellate tribunal to adjudicate on this one. This could lead to a delay in launch, but we have a healthy pipeline, and we are confident we'll be able to mitigate the impact of this delay to realization. On new communities, we have engaged with Max Estate Gurgaon as senior living, managers for their upcoming intergenerational project in Sector 36A Gurugram. This will be North India's first intergenerational project. About 0.7 million square feet of the total 2.1 million square feet shall be developed for senior living with about 292 apartments. The pre-launch activities for the project are in full swing, and Max Estates has already filed for RERA application, and hopefully in the next few days that approval will come. And as told you earlier, the response we received from prospective customers has been really overwhelming and great. For Bengaluru, we have closed all terms of definitive agreement long back. The financial closure with banks is taking a little longer than expected. That's about a 1.08 million square feet development. We are also exploring a new opportunity in Chandigarh. At this point of time, the DD is underway. And as and when that transaction materializes, we'll share more details, but we are committed to meet our target of 1.5 million square feet development every year. On the assisted care vertical, on care homes, significant expansion, planned for FY'25, which I shared last time, about 600 beds, of which 136 already operationalized, about 180 currently under fit outs, right? That gives us about, 380 beds and 200 under negotiation, in Chennai. The 80 beds in Whitefield and Bengaluru already under fit outs, and the 98 beds in Gurugram will be operational by Q2 FY'25. So that's how we'll meet our targets, of what we have been sharing. On care homes, the net revenue grew by 19% year on year. The Gurgaon care home is now clearly, demonstrating the economic model we had visualized. The net revenue is 1.3 crores in Q1 FY'25. So on a mature steady state, it will indeed hit the 5 to 6 crore number that we had talked about. The growth is 60% Y-on-Y, led by a very high occupancy. Now it's 72%. Margins have sharply improved from 1% in Q1 FY'24 to 25% in Q1 FY'25. And as we ramp up the occupancy, these margins will improve further. On care at home, we continue to expand our footprint in new geographies. Bengaluru and Chennai have registered strong sequential growth of 68 and 70% respectively in Q1 FY'25 over Q4 FY'24. We have also increased the penetration of high margin services like critical care, physio, diagnostics, etc. We have now achieved the highest ever revenue of 3.8 crores in Q1 FY'25, and the growth is 121% over same quarter last year, led by the high margin service offerings. Overall contribution margins in NCR for this business are 20% now in Q1 FY'25, and we have touched about 17,300 lives through this vertical since inception. On AGZ, the respiratory health condition was launched with 6 products, and we plan to launch about 25 plus products somewhere in the next 30 to 45 days, including the fall detection smartwatch. As you know, we have decided that in this business we do few conditions but go really deep. For example, in the joint pain management, we now have about 40 to 50 SKUs. We have 17 kind of knee braces, for example. There are topical pain relief like a pain patch and a roll-on, solutions for the back pain, foot, ankle, and even the neck. So our belief is to go really deep into every vertical that we launch, do a few, but go really deep. Overall, AGZ, we have achieved the highest ever net revenue of 4.7 crores in Q1 FY'25. We have crossed now an ARR of about 8 to 10 crores, and soon we'll be touching, a number higher than that as well. Medcare business net revenue of 3.1, which is a growth of 163% or a contribution margin of 4%. Now coming to the business and financial performance update for Q1 FY'25, a strong endorsement of a brand and offering by customers. We continue to have very healthy customer satisfaction scores, 91% for care homes, 94% for care at home, 95% for Medcare, and 83% for AGZ, which is really a vindication of the kind of quality we are building. If you look at the Dehradun community, there the scores continue to be as high as 85%. On the Antara Senior Care, we have also received, by the way, the HR Excellence Award from Business World, and we were competing with brands like ACC, L&T, Aditya Birla, Kotak. So NTPC got the bronze medal, we got the silver medal. We also certified as a great place to work now. We are a very young organization, and some of these achievements and milestones are a vindication of the quality of organization that we are building. We have also signed, as you know, an MOU with IIT Delhi, so that we are able to design and customize our products for seniors, especially the mobility aid solutions, and we're working on that. We've also entered into a collaboration with Dementia India Alliance. It's an NGO working for dementia based out of Bangalore, and they're helping us in terms of both protocols and content for training, and knowledge partner for us. They have a tie-up with Nimans on an all-India basis. On the consolidated performance for Q1 FY'25, I have shared with you last few quarters as well that since we don't have any more inventory to sell, you might find a dip in the consolidated revenue and profits. It's purely temporary. As we get launch the Gurgaon community, some of these gaps will now start to fill up. Our consolidated EBITDA loss has been contained in line with our expectations. It's a loss of about 21.5 crores versus loss of 16 crores in Q4 FY'24. Primarily on account of no inventory to sell the residences vertical. However, we have been able to contain the losses through cost optimization and a very healthy treasury, income as well. Overall, all our treasury and other monetizable assets, we stood at a healthy number of rupees 405 crores plus as of June 24, and the company has a consolidated net worth of 466 crores at June 24 end. For Antara Assisted Care, overall net increased by 139% to 10 crores in Q1 FY'25. I'm talking about revenue. This was 4.2 crores way back in Q1 FY'24. Now it's 10 crores. Care homes net revenue at 1.5 crores is a growth of 19%. After adjusting for the revenue of non-operative, care homes, and the care homes contribution margin, improved to 3% in Q1 FY'25 from -5% in Q1 FY'24. AGZ, the net revenue scaled up to 1.57 crores in Q1 FY'25 versus 1.43 in Q4 FY'24, which is a growth of 9% sequentially quarter on quarter. And the Medcare products are now gaining traction on Amazon with more than 40% plus power wheelchairs, 100 wheelchairs being sold in Q1 FY'25. Some of you who may have joined the call for the first time, I'd like to reiterate that we are the only organization building an integrated care ecosystem for seniors. Our belief is that seniors' needs change with age and medical condition. Therefore, we want to be there for them at any point of time on whatever they need from us. Recently, you may have seen a paper being released by Bloom Ventures, who have again reiterated that a full integrated model is the way to go in the senior care business. There are essentially three business verticals. We have independent housing for seniors. This is meant for people who are more healthy but want to stay in a safe and secure community with like-minded people. For people who need more immersive interventions of daily activities of life, have gone through a medical episode, we have care homes, memory care homes, and care at home. And then we have, products for their comfort and convenience. So basically, AGZ is nothing but an online and offline store focused on senior-specific products and solutions to manage their chronic health conditions. You can buy these products from our website, from marketplaces. You can call for assistance at any point of time if you need help in choosing the right, product. We have a centralized command center, as well for this. The market size of senior care continues to be large. Each, quarter I see a new estimate being released by some authority or the other. Is a $10 to $12 billion market. Colliers came out with a report on the demand for, residences for seniors. They're talking about 18 to 20 lakh units. So it's a significant, market, whichever way you look at it. In summary, so far, Antara Assisted Care, we have served around 50,000 patients so far. On the medical equipment side, about 800 SKUs, including Antara labeled products, some of which are available on Amazon, Flipkart, 1mg. So hopefully in the next 5 to 7 years, the promises that we have been making of 8 to 10 communities, 4 to 5,000 units of senior living, 1.5, 2,000 beds of care homes, memory care home, 50 plus, AGD stores in both physical and online presence. Our focus on 4 million customers. So all that we have said, we are now executing to it, and this quarter is a demonstration, of the results of that execution, which we have been very transparently sharing with you. So thank you very much for your patient listening, and happy to answer any questions.
Thank you very much. We will now begin the question and answer session. Participants present on the audio bridge who wish to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to wait for a moment while the question queue assembles. The first question is from the line of Aditya Kondawar from Complete Circle Capital. Please go ahead.
Hi, sir. Just wanted to ask, how are we going to use the 250 crores that we are planning to raise? Thank you.
You're talking about utilization?
Yeah, utilization, yeah.
Yeah. That's the growth capital that we need for all the businesses over the next, 2 to 3 years. So it's basically growth capital.
Sure, sir. I'll come back and with you. Thank you.
Thank you very much. Next question is from the line of Harsh Kundnani from Ionis Alpha. Please go ahead.
Yeah, hi. Thanks for the opportunity. A couple of questions. On the newer care homes that we are building, which category will they cater to? Will they predominantly be memory care homes or any other specialization? And is there any difference in the pricing model and the margin profile?
Yeah. Hi, Harsh. Yeah. So we have only built so far one memory care home. We want to wait and watch for the response before we decide to scale that up. So all the care homes coming up are primarily focused on assisted living, and some on transition care. The model is exactly what we have thought of in Gurgaon. So there's been some adjustment on pricing that we have done based on the geography we are entering, but more or less the economic model remains the same. But the margin profiles will be a little better because of transition care.
Understood. So is it that irrespective of the geographies that you build these care homes, the pricing would be standard?
Not really. The Bangalore pricing is a little above, the Gurgaon pricing. So it depends on market to market. What we see as a good product market fit, we decide the pricing accordingly. Because Bangalore is a more mature market, there is more acceptability, so we'll be able to price a little higher than Gurgaon.
Understood. And on the newer care homes, the Bangalore and the Noida ones, how has been, the response? And is there any, occupancy rate that you would target over the next, say, couple of quarters in this, care homes?
So we just launched the Noida care home. As we speak, the press release went today. We should have the first move-in soon. So it's a great response, but let's wait and watch. But as I repeat, the occupancy model is exactly what we had tried to, emulate in Gurgaon. We just have to replicate that. That's the target.
Understood. And just lastly, the 98 bed in Gurgaon, that's on track for Q2 launch?
Yes, very much.
Perfect. Thanks a lot for this.
Thank you, Harsh.
Thank you very much. The next question is from the line of Raj Joshi from Ace Securities. Please go ahead.
Hello, sir. Thank you for the opportunity. So I have a couple of questions. The first one is what is the update on the Noida phase 2? It's actually taking a longer than expected time. And by when can we expect the construction to commence?
Yeah, as I said, Raj, that the phase 2 RERA application we had put in has been rejected. We have now appealed to the appellate tribunal. The issue is around the ambiguity that continues at the 150, which is a much larger issue. But we are hopeful we should get a favorable, order, on that because, so let's wait and see.
How much time it takes? If you have any idea on that?
Difficult to comment right now. As I said, we already, appealed, to the appellate tribunal. So once they hear our case, then we should be able to give you better guidance on timelines.
Okay. And sir, my another question is, how are the early trends in terms of the occupancy at the Bangalore care home?
So, hi. The Bangalore care home has been opened for show rounds just a week back. What I can say, because it's just been a week since we've opened it for show rounds, we've had 30 show rounds till date. We are expecting the move-ins to start in the coming few weeks because it takes time after people come and see the property. But it's a very positive response. In 2 weeks, we've had 30 show rounds.
Okay, great. That's helpful. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, before we take the next question, I would like to remind the participants that you may press star and 1 in order to ask a question. The next question will be from the line of Nikhil Gupta, who is an individual investor. Please go ahead.
Yeah, hi. I actually want to understand a business model. I think I've read in the previous presentation that you're shifting from asset heavy to asset light model in all the residences. So I need just understanding on that. How are we converting that to a asset light model?
Hi. The fact that we shifted from asset heavy to asset light was a few quarters back. Just to reiterate, after Dehradun, where we bought the land and moved forward with the full construction, we consciously decided that we'll not be investing in land, and hence the asset light is to that extent. So we are now partnering with developers who have their own land, or they are already partnered with landowners. They have an interest to develop the property. If they are able to develop the property, we will bring our know-how of senior living, our design specifications, our sales capabilities, and also then the operating of the community. If they are not able to construct and we find the opportunity very great, then we come as a construction partner.
Got it. One last thing is, there was a statement you mentioned that you are committed to build 1.5 million square feet every year. So is it like, I want to understand more, is it like end to end in 1 year, the execution will be done for all this 1.5 million square feet, or it's just the extension part?
Yeah. So the meaning of that is we'll always be committing to 1.5 million development. So that means every year we will add to our book of residences opportunities, which will give us a future development of 1.5 million square feet.
Mm-hmm. I understand. Thank you so much.
Thank you very much. The next question is from the line of Karan Mehta from Mehta Investments. Please go ahead.
Hello, sir. Thanks for the opportunity. Sir, we have seen that the employee expense has risen on a year-on-year basis as well as on a quarter-on-quarter basis. So have we taken additional manpower and front-ended the cost?
So I'll take that question. So if you are comparing from June, from 31st March to 30th of June, there is an impact of the annual increments what we have given to employees, and fortunately our MOSs were above expectation for 31st March 24, and hence there was a variable pay payout also, and based on the last year payout we have done the provision for this year.
Plus, we've also launched new geographies over the course of the year, and AGZ, which is our growing business. All of that also pulled together has led to the employee cost and the ESOP expenses as well. So these are all the various reasons why you see an increase in employee cost.
Understood. And what is our target for this year? Like, what will be the ballpark for top line for this financial year, FY'25? You know, we account proceeds from Noida Phase 1 in the P&L.
Difficult for us to give any forward-looking statements. We do report quarter on quarter. We have given a flavor in the past of a 5-year vision, but difficult for us to comment on the year.
Understood. I will join back the queue for further questions. Thanks.
Thank you very much. The next question is from the line of Nishi Shah from RS Investments. Please go ahead.
Thank you, sir, for the opportunity. I have a couple of questions. First is, what is our debt equity ratio currently?
We have no debt on our books at all.
Apart from the vehicle loans, which are very sundry debts, which we take for specific vehicles, we are not having any debt in our group.
Okay, sir. And how much of the growth capital is deployed in Q1 and how much is estimated to be spent in FY'25?
Okay, we'll just give you that number. Just give us 30 seconds.
Okay.
No.
So currently for this June quarter, the deployment for the residences business is only 3 crores, and for Antara Assisted it is 36.5, which is also appearing in the notes of the results which we have shown. For the next 9 months, the plan is that for residences it could be going up to a level of around 135 crores, and for Antara Assisted around 140.
Okay, sir. That answers my question. Thank you, sir, and all the very best.
Thank you.
Thank you. Ladies and gentlemen, before we take the next question, I would like to remind the participants that you may press star and 1 to ask a question. The next question will be from the line of Raj Mehta from Wisdom Advisors. Please go ahead.
Yeah, good evening, sir. So, what is the update on... Hello?
Yeah, please go ahead.
Yeah. So, what is the update on memory care home? So, how is the occupancy panning out?
Memory care home, you said?
Yeah.
So memory care home after we got the Mental Health Act license, has been operational for 60 days, and we've had currently we have 6 residents. So that's around 25% occupancy.
Okay. And sir, any new watch launched under AGEZ? Did we open any new health studios?
Not health studios, because we realized that 80% of the customers are interacting with us virtually over WhatsApp. But we have launched the third condition, which I said, the respiratory rehab. That condition we launched.
So overall, we now have 40 products across 3 conditions and approximately 100 SKUs under them. So that's the expanse of products which are now available under the AGC brand. Health studios now we have 3.
Okay. Got it, sir. That's it from my side. Thank you.
Very much. The next question will be from the line of Kamal Gada from Infinite. Please go ahead.
Hello, sir. As I can understand, before all the other segments start to contribute, residences would be our major contributor to the revenues for next forthcoming few years till all other business scale up. So, and the Collier's report says that the senior living market will grow up to 12-13 billion in the next 5-7 years. So our target of 1.5 million square feet per year, will that increase gradually, or we are going to be constant at 1.5 million over the next 5 years?
First of all, residences may not be the most significant contributor to top line. It will probably be Antara Assisted Care, within that AGZ actually over the next 4 to 5 years. But let's see how it pans out. So on the 1.5 million square feet, that's our ambition currently, keeping in mind our capability of executing and bandwidth. However, if we notice there's a much better response on the market, we will look at it. But currently, for the next 3 to 4 years, we are sticking to 1.5 million square feet per year.
Okay, understood. Thank you.
Thank you very much. The next question is from the line of Harsh Kundnani from Ioneos Alpha. Please go ahead.
Yeah, hi. Thanks for this follow-up opportunity. Just couple of more things. I don't know if I missed this, but is there a timeline for the capital raise that the company is planning?
Over the next 12 to 18 months, and might come in one or two tranches, we don't know, but that's a total estimate. So maybe in the next 12 to 18 months.
Understood. And for the care at home business, is there any mix change? Because sequentially the patient served has been flat, but the revenues, have grown quite a bit on a sequential basis.
There is a change in focus. Like Rajit also mentioned, that we are now looking at increasing the share of high margin and high AOV or order value services, such as the critical care and physiotherapy. And we are also looking at a price mix balance as well for the others. So there is clearly a shift towards high margin, high AOV services.
Sorry, I didn't get the price mix balance that you mentioned.
We are looking at our patient caregiver and nursing caregiver services, their pricing as well. So we are, especially in markets like Bangalore and Chennai, which are mature markets, we are looking at obviously much lower discounting than we've offered in Delhi.
Understood. So it's also the transaction value going up as well as a mix change.
Yes, please.
Okay. Thanks for this.
Thank you very much. The next question is from the line of Videsh Sangwan, who is an individual investor. Please go ahead.
Oh, hi, sir. Just a question on the Greater Noida land. Since our Noida phase 2 is on hold, but since we are in that market and hold a good reputation in the phase 1, is there any plans to launch in Greater Noida? And also, in fact, there's another point is like the appreciation of the land value in most of the markets. Like, what's the plan on that?
So Greater Noida, we've been very clear. It was a land bank that we were holding, which we want to liquidate and monetize, and that's the plan. We don't want to build, on that. We've already in dialogue, and I think we received an advance, for that. So by March of 25, we would have realized the entire value of Greater Noida. So that's for not for development, but for monetization.
Okay. Yeah, thanks. That was the only question.
Thank you.
Thank you very much. The next question is from the line of Nikhil Gupta, who is an individual investor. Please go ahead.
Yeah, so do we have any cash or cash equivalents on our books, and how much is that?
243 crores, cash or cash equivalent.
Okay.
Thank you very much. Ladies and gentlemen, in order to ask a question, you may press star and 1. I would like to remind the participants that you may press star and 1 now. The next follow-up question is from Nikhil Gupta, who is an individual investor. Please go ahead.
Yeah, a quick follow-up. So how much capital are we planning to raise? Sorry, I think I missed that conversation.
For 250 crores.
Okay. And we already have 250 crores on our books, right?
That's cash. But we also have monetizable assets, and we also have a cash surplus in there. That includes. We have monetizable assets as well, of Max Towers in Greater Noida.
Yeah. So can you please quickly break up the monetizable assets and the cash a bit?
Total about, let's say, 400 crores. Total 400 odd crores plus 250 raise.
Sorry. Can you please repeat?
400 crores of cash and monetizable assets, and then 250 we want to raise.
Okay.
Hello. Yeah.
Thank you very much. The next question will be from the line of Yogesh Singhvi from Sky Capital. Please go ahead.
Hi, everyone.
Hi.
Yeah. Actually, if I remember correctly, in previous Concall, maybe 2-3 quarters back, you had mentioned regarding the launch of the senior residence in Hyderabad region. But after that, it suddenly disappeared from your talks. So what is happening with that?
Yes, we were going through some diligence, and at this point of time, we are still waiting for that. So we don't want to, commit before we get the full report.
But at that time, you were pretty sure the next maybe 1 or 2 months you will be going ahead with the launch.
Yeah, we were, but as you know, in land, after diligence, you have to figure out many things.
Yeah.
So that's the reason we are delaying.
So Hyderabad is on the radar or is now off the radar?
Very much on the radar. Nothing is off the radar. It takes a lot of time, as you know, to really, do a deal.
Okay. Yeah. Okay. Thank you.
Okay.
Thank you very much. As there are no further questions, I would like to hand the conference over to the management for closing comments.
So thank you very much. Thank you for the engaged questions. It's really much appreciated. As we know, we have been on a journey for the last few years to create an integrated care ecosystem. Very happy that we are serving a lot of patients, as I mentioned earlier, 50,000 overall. There are 3 business verticals: the asset side, the services side, and product side. All 3 feed into each other in one sense. So hopefully, when we have all the communities up and running and the 2,000 beds of care homes, you'll find the synergies really playing out in terms of cross-sell and the customer acquisition costs coming down. So that's the journey we are on at this point of time. Thank you very much for your support, and look forward to interacting with you. Thank you.
Thank you very much. On behalf of Max India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your